Ladies and gentlemen, welcome back. We are back. It's been a couple of weeks off. We have had our lovely co-host over here, Jennifer, have not only her birthday, but also take some time off as well. Now, guys, we are, as you always know, answering all your questions that you do send us in. So this week, of course, hot topics, as we usually see, is obviously stuff to do with finance, stuff to do with, what's the market going to be doing? And of course, as always, I'll let my lovely co-host, Jennifer, take the floor.
Thank you. We're back, guys. As always, we have 3 questions for you today, Marc.
Yep.
First one, we are starting to hear about non-bank lenders continue to expand their market share of residential home loans. Are we going to see this continue even with a lower rate hike in October?
Yeah, really good question. Again, we always get some really good questions from you guys, and I think that seems to be quite a topical discussion, is obviously, which way do we go when it comes to lending and things like that, because of course the majors are making it slightly harder as time progresses, because there are things that we need to factor in, like ATO debts that some ABN holders may have that they didn't have a couple of years ago. And obviously, as we know, government is now tightening everything, and money policies and everything are all changing to a degree. So banks are following suit as well and wanting to make sure that they've got the best of breed borrowers. Now, with that said, it does open up a lot of new opportunity for the non-bank lenders. Now, this gives them the opportunity to, of course, take on a larger market share with those that may not be, prime lenders the whole time. But of course, we understand that if markets were to start dropping, we would probably see some competition come back in play, where the majors would want to continue taking that market share, and most people would opt to go for them. So this time around, I think we are starting to see that there's a lot more non-banks trending.
Yeah.
There's certainly going to be more non-banks trending as well, and I think we're going to probably see even some more non-banks enter the space in due course, because if we look from our background as well, we understand the private debt markets and obviously coded debt markets as well, so stuff like the banks, they're very similar now in bottom line interest rates. Yeah. So it's an interesting time. I think we're going to see some very different type of opportunities pop up when it comes to products from new banks.
Interesting things to look forward to. Do you think we will start to see a slight bounce back in the market as we enter the final quarter of the year?
Yeah, I think we will. It's interesting when you start looking at the statistics. The media makes out as if we're losing a huge amount of value on our real estate. Now, yes, in some parts, they have dropped significantly, in others, not so much. But if we have a look at some of the valuations that have been coming in, even here at where we're at, JR, they're coming in above purchase price, which is crazy on some of the newer type of products. So they can still see the value of real estate in certain parts of the country. In others, they can obviously see that it's probably well inflated, and that's something that is going to definitely impact there. But long story short, yes, I do believe we are going to see when I say a bounce back, I don't think we're going to see anything above 5-10%, but I think we're certainly going to hold throughout this final quarter, Christmas period, and into the new year, and we might get some of that new energy, fresh blood again, especially when we start to see inflation take its toll, interest rates start to be curbed slightly. I think that may or may not be the case, but I think we're going to see interest rates kind of get sharpened up a bit sooner than we expect, and all of these contributing factors will, of course, give us that lift that we do need again in the market.
Yeah, many people are waiting on the interest rate updates. I think
absolutely.
We'll kick off next year as well with the increase of people wanting to come back into the market. We are aware that there is a still massive housing shortage across Australia. Even with the impact of construction costs, will we continue to see more people invest into new real estate over the next 12 to 24 months?
Yeah, I think we will. Again, we're in a housing shortage. I think that's the key part of that question there is that no matter what is going on with costing and things like that, we still need a roof over our head, right? And when we look at that, we look at the cost of what it may cost to buy, let's say in the west or the eastern suburbs of Sydney, or your higher quality areas of Melbourne, let's say, and we are looking at only the elite of the country now, buying into those markets. So, gone are the days of being, a middle income earner and being able to buy a nice little 2-3 bedroom house in a nice quiet street in an affluent type of suburb, or at least an upcoming suburb. What we are starting to see now is that people are being driven out because of obviously affordability and things like that, even rental affordability. So I think, from an investment point of view, are we going to see, a bounce back in those new dwellings being built across apartments and houses in the country? Yes, I certainly think we will. Again, we've got a housing shortage and people cannot afford, on average, 1.5, 1.8, $2 million homes, at the best of times. So, that price point, that does sit between, let's say, $500 and let's say $800,000, whether it be an apartment, whether it be houses, is certainly going to continue being an in-demand asset as time goes on, due to one core aspect, which is affordability.
I agree with that. But that's all for today. As always, guys, you're welcome to send through any questions you might have directly to Marc or myself, or comment below alternatively. If you have anything else that you require from us, or you want to suggest anything for our next video next week, you're welcome to do that as well. But that's all for your State of the Market. We'll see you next week.
See you guys.